Right. Well, good afternoon. Thank you, everyone, for joining us today for this Impact Investment Masterclass. We've got quite a few registrations, so I'm sure that people will trickle in over time as Zoom finds a chance to run all of its updates. We are going to jump in shortly, but just first a few housekeeping notes. It's a relatively small group today intentionally. We'd like to keep it interactive, so please do pop your questions into the chat so that we can address those to the relevant speakers as the conversation goes on. We would really appreciate that. Also, just a reminder that you'll be muted, so if you did want to ask a question verbally rather than in the chat, you can note that and we can always give you that opportunity after the panel. My name is Nicole Martins. I'm Head of Impact Investing Research at Krutham, and I'll be moderating the discussion today with our fantastic speakers who are all winners from the recent Villgro Africa Impact Investment Awards. We'll also share with you a link if you'd like to download a bit more information from the awards, including a summary report and some case studies, which will give you a bit more information about these winners and the other winners from the other categories. But before we dive into the panel discussion, I'm going to hand over to Dr. Stuart Theobald, who is the Executive Chairman of Krutham, to give some opening remarks. Stuart, over to you.
Thanks very much, Nicole. Good afternoon, everybody. Lovely to have you here with us for what will be an insightful opportunity to learn from people already at the cutting edge of impact investing in Africa. This event is part of our efforts to share knowledge broadly on what's happening in the impact investing ecosystem, which was the motive for developing the Africa Impact Investment Awards as a whole. And the methodology of the awards really brings some of the best, most experienced judges together to examine what is happening in the continent and choose examples that we can all learn from of excellence in the impact investing sphere. And you have three examples with us to join your panel today that Nicole will introduce in more detail in a moment. For us at Krutham, we are researchers and consultants. We're doing a lot of work around impact investing and helping clients understand the opportunities and helping them structure and manage impact investing in vehicles. And it's been quite clear to us in the years that we've been doing this work that we need Africa to understand itself better and for Africa to project what's happening on the continent to the rest of the world. In our view, an investment in Africa is by definition more impactful than investments in many other markets, simply because the development consequences tend to be greater to investment in Africa. And that's a message that we propound internationally, that we should, in developing investment policy and regulation, recognize that investment into markets like Africa, even into vanilla investment instruments, are more impactful than other regions. And we should recognize that in how we encourage and manage our investment ecosystems internationally. So these awards really project to the rest of the world what's happening in Africa, how exciting and how innovative the impact investing ecosystem is, as well as sharing best practice domestically to help foster the impact ecosystem across the continent. So it's really good to have you with us and some of the winners to share their achievements and what they've learned in their own impact investing journeys. And I look forward to hearing from them. Back to you, Nicole.
Thanks very much, Stuart. So I think just to give everyone in the audience a sense of calm, we do acknowledge that there will be people that are joining this webinar today who are at different points in their impact investing journey. So we have advised the panelists to limit jargon, keep things practical and straightforward. But again, if you have any questions that pop up throughout the discussion, please do throw them in the chat. The speakers will be happy to clarify anything or to answer any questions as we go. So that's really no problem. As Stuart was saying, the Africa Impact Investment Awards, we're really there to try and acknowledge leadership in the impact investing space. Today, we are speaking to winners from 3 of the different awards categories, though there are a number of them that are not covered today. Today, we're looking at it from the investment side. So we're speaking to the winners from the Impact Funder of the Year Award, Impact Fund of the Year award, and then Financial Structure of the Year award. So just want to give you a quick background into what each of the award categories are really about. When we're talking about impact funders, these are funders that are deploying capital specifically to support impact projects. And we're really excited because this year for the nomination process for the Impact Awards, the nominees together represented about $700 million in assets under management, which is nothing to sniff at. On the impact fund side, we're looking at fund managers that have a dedicated impact investment fund in their portfolio. Again, not something that's super common, though it is gaining traction. So fantastic to see that's happening in the African market. And then on the financial structure side, we're really looking for innovative financial structures that are enabling and creating opportunity for impact investments. So bringing together that impact funding with projects. So we're really excited to have the winners of those categories here today with us. What I'd like to do is, I always find that people are much better at introducing themselves than they are being introduced by others. So we're going to do a quick round of introductions. I'd really love for each of our speakers to introduce yourself, your organization, and just note which of the awards categories you won. And congratulations again to all of you on the wins. Let's start with you, Anya.
Good. Hi, everyone. I'm Anya Kaywood, and I head up sustainability at Phatisa. Phatisa is a private equity fund manager focused on investing in the food value chain in Africa. So I think, as Stuart was saying at the start of the call, by the very definition of what we do, investing in the food value chain is impactful, but we really endeavor to take it a step further than that and be really intentional about driving impact in each of our portfolio companies that we invest in. And a big way that we've done that over the last few years is to employ a technical assistance facility. And I think we'll be talking about that quite a lot today. That's me. Thank you.
Thanks, Anya. And Phatisa, we're our Impact Funder of the Year award winners.
Oh, sorry, forgot to mention that.
That's no problem. Let's hand over to our Impact Fund Award winners for the year, to you, Marika.
Thank you so much, Nicole, for the introduction. And it's a privilege to be here today. I'm the head of ESG and Impact at Inspired Evolution. And this head wears many hats. I sit on various committees and the ENS panels at investor level, and mainly responsible for the implementation of our ESG management system across our investment cycle. So Inspired Evolution is an African impact investor. We have over $530 million of funds under management across 3 funds at the moment. We basically invest in scalable commercial opportunities in 2 main themes, and that's renewable energy infrastructure and resource efficiency investments. We're a small team of about 20 employees, and we're spread across 5 offices, and our headquarters are here in Cape Town. We also have offices in Mauritius, Kenya, Cote d'Ivoire, and the UK. It's always nice to, when you do impact investing in Africa, to have the teams on the ground to understand the area that we operate in. So, looking forward to sharing our stories and expertise with you today. Thanks again.
Thanks very much, Marika. Jackson, how about you?
Hi, everyone. I'm Jackson Mother. I'll present Villgro Africa. I'm the head of investments at Villgro Africa. So Villgro Africa, what we do, we invest in healthcare and life sciences. So our play is twofold. On the one hand, we invest mostly seed and pre-seed capital. Then on the other hand, we provide very in-depth TA, technical assistance. So we work with these enterprises that are trying to scale and raise funding. So we come in early, and then we support them through their growth journeys. Very nice to be here today.
Great. Well, thank you so much. And I'm sure that everyone will agree that we've got a really great panel together today to talk about, from this investment perspective, talking about impact investment in Africa. And we thank you again, all of you, for your time today. I think one of the things to start with is that, obviously, when we're talking impact investment, we're talking about investments that are looking for both financial return and some sort of impact return. And it's really important that we understand that intentionality. I'd be keen to understand a little bit more from each of you around what are those sort of returns that we're looking for? How are we defining ourselves as impact investors? So Anya, you started a little bit around what the sort of ultimate outcome is that Phatisa is after. Can you talk us a little bit more, talk to us a bit more about the sort of investment thesis behind what you're doing?
Sure. So I think our investment thesis really is to grow sustainable food systems in Africa. And of course, then, as you said, Nicole, I think the intentionality around that is really critical. So I think we've got quite a detailed kind of impact management and measurement system in place where we understand our theories of change. So, you know, if we want to increase yields in this business, what do we need to get to that point? If we want to increase smallholder participation in our businesses, how do we meaningfully do that? You know, we have some, like, for example, training that we do for smallholders, but what next? And I think that's what we really try to focus on at Phatisa. We don't just want to say, cool, we've trained 1,000 farmers, tick, beneficiaries 1,000, off we go. But what does that training actually mean? So a practical example maybe of that is we helped one of our portfolio companies to kind of aggregate their smallholder farmers, and we supported the smallholder farmers to get sustainable certification. So it was the roundtable for sustainable palm oil. So some of you might know there's a lot of kind of hype around palm oil and the damage it was doing to forests. And so therefore, getting that sustainable certification was really valuable to the smallholder farmers because it meant they could guarantee higher prices for the palm oil that they were selling. So not just the, cool, we've trained you, but now what does that mean? And how does that actually impact you down the line? And I guess understanding what the end goal is, which in this case was increasing income for smallholder farmers sustainably. You know, if you know what that is, you can then work backwards from that point, if that makes sense.
Yeah, definitely makes perfect sense. You need to be really clear about what it is that you're trying to achieve. And then, like you say, retrospectively have a look at how that might be coming together. And it's really this idea of making the most effective use of the finance that you have, right, to deliver on both those fronts. Marika, obviously for Inspired Evolution, I mean, the organization wouldn't exist if it wasn't for the fact that it was financially rewarding to do this. Can you talk to us a little bit more about the relationship between the financial return and the impact return from the perspective of a dedicated impact fund?
Yes, definitely. Thanks. So our investment criteria, as you mentioned, it's to prove that the financial returns are alongside environmental and social returns. So firstly, we look after shareholders and stakeholders' interests. So we look at companies when we do our screening. Our investment criteria looks at the profitability of a company. We look at the managerial skills. Is it the right team? Proven technologies, minimum ticket sizes. So everything that goes around, the financial viability of this investment. And then we also look at the company's ability and commitment, basically, to look after our ESG policies and procedures and to onboard it, because we also need to implement our ESG management system as a pass-through obligation to our portfolio companies and make sure it's practical enough to implement on the ground. And then we need to make sure that it's aligned with our core sustainable development goals that we have. Hopefully, I can get into the details a little bit later, but we have identified 5 core sustainable development goals. So that basically forms the foundation of our, investment criteria. And an example of that is our poster child. We always like to talk about Red Rocket, and because also it's an investment in Evolution 2 Fund and Evolution 3 Fund. And Red Rocket is a fully integrated independent power producer in South Africa, and they build, own and operate renewable energy infrastructure across sub-Saharan Africa. So it's wind, solar, PV and small-scale hydro. And so what that looks like in practice is when you look at the financial performance of Red Rocket, they've invested more than $1 billion in renewable energy across Southern Africa. When you look at renewable energy deployment, well, they've got 3.7 gigawatts in operation or construction and in the advanced pipeline at the moment at financial close or awarded bidder in the South African REAP program. And also, most importantly, they help to decarbonize South Africa's energy sector, which is based currently, as everyone knows, very much fossil fuel monopolistic system. So we're transforming the energy landscape of South Africa through portfolio companies like this. And very importantly, also, they're currently about over 200 full-time quality jobs in the renewable energy sector. And this is a growing trend-setting company that we can, we really see how this financial, returns are playing out in the environmental and social side. And I mean, I encourage everyone also to have a look at their website and what they're doing in the media. They're quite good with, showcasing what this looks like in practice. So that's always a nice example of impact investing in practice as well.
Oh, thanks, Marika. It's always good to get a real life example. I think it's good to showcase as well that there's often this misconception that if you want to deliver on impact, you're going to have to sacrifice somewhere on the financial return side. Or what we've equally seen is that if you're looking to deliver or achieve impact, is that you sort of apply a softer due diligence lens or look at these investments with a little less criticism, which obviously is not going to be in your favor going forward. But I mean, on that, Jackson, I know that you guys have a pretty unique approach when we talk about trying to make these investments that are both financially and impactful, financially rewarding and impactful. I know that Villgro's got a pretty unique way of doing that. Can you talk to us about the investment process when you're an impact investor?
Yeah, sure. Basically, the way we do things, and maybe I can just start by telling you that we invest mainly in three kinds of companies. There's a health tech, biotech, and medtech, and they all have different kinds of horizons, even for profitability. So the way we do it, if I could just standardize the process. So we start by inviting applications, and we receive out of pitch decks and teasers. In one call, we could get even hundreds of them. So we start with a rapid diligence process. So we do a high-level analysis, see who is going to be sustainable, assess the traction and things like that. And then after that, the next phase, we do a bit of in-depth analysis. We look at the financial models. We look at the business models, like analyze the pitch decks and things like that. So basically, at that point, we're able to tell if we're able to know if you can believe the story that we read in the decks in the first place. And then at that point, we can determine what makes sense as an investment instrument. Is it equity? Is it a convertible debt? Is it a safe? So that's the point at which we determine, and also how much the company needs. At times, when someone comes to you and they are looking for $1 million and they don't know why it's not 1.1 or 0.75. So we interrogate the numbers and then ascertain what the need is. And then from that point now, we structure the investment. So the way I can describe our playbook is that we are more heavily skewed towards technical assistance, because most people who come to us are looking to raise follow-on funding. So the objective when we invest, we don't invest in perfect financial models and perfect pitch decks. Our job is to work with them and make sure that we help them fine-tune the financial models, improve on their storytelling, for example. So when we invest $100,000, for example, then we can see them continue to raise even more money. And we have quite some success stories. People we invested in $100,000. Now they have raised even $10 million only a few years later. So that's the way we work. Our playbook has both the TA, and the TA is the main part, if I may say so, and then we also have the cash side of the investment. So most of our instruments tend to be either equity or convertible notes.
Great, thanks, Jackson. And I think there's a lot of great points in there, specifically around the context-specific nature of impact investing, right? And making sure that you use the right tool for the job. Also interesting to hear you talk about technical assistance, and we'll talk more about that around sort of the role that impact investors play in providing that initial finance that's necessary in order for organizations, particularly social enterprises, to then grow and mature and be able to access sort of mainstream commercial funding. Now, I know that we've been doing quite a bit of work as Krutham looking at impact investment and impact investing strategies and growing the market in Africa, as Stuart was mentioning. And when we speak to the social enterprises, a lot of them will say that more valuable than just the financing that's received is the technical assistance component. And that's really what enables them to unlock their capacity to grow and to mature and to scale up. Anya, I know that you guys, obviously you'd mentioned you have a specific technical assistance facility. Can you talk to us a little bit more about what you've seen in terms of the relationship between the technical assistance, the funding, and the returns?
Sure. So I think I've got, quite a practical example around this. So our technical assistance is only for our portfolio companies, and we are trying to find the sweet spot between improving commercial returns for our portfolio companies and at the same time improving impact. So sometimes that's kind of more long term. So one of our projects is a decarbonization strategy that we're doing across our portfolios. So each of our portfolio companies has a dedicated decarbonization strategy. And although I think you can see the financial returns related to decarbonization strategy. So for example, one of our portfolio companies exports into Europe. There's a lot of pressure coming with CBAM. So for them, they can see very clearly the link between their decarbonization strategy and their future potential to carry on exporting into Europe. But it's not immediate. But we do, and again, some of our other projects look at kind of whole farm health, soil health that improve yield, improve fruit quality. And again, that might not be immediate. It might be a more medium-term impact. But an example of where we've seen our technical assistance kind of quite quickly actually resulting in increased revenue for the portfolio company was a project called Project Root. And there we looked at developing route to market strategies for one of our portfolio companies that is an animal vaccine company called Delta Moon. And Delta Moon originally only operated in South Africa, but we're very keen to expand their footprint into Africa. And because of the strategy that we've helped them with to really understand the different markets, as you can imagine, vaccines are quite heavily regulated. You don't just enter a country and start selling vaccines. So there really needed to be quite a lot of dedicated work around understanding the markets they were entering to enable them to sell. A equally important part of that project was training smallholder farmers and starting to develop relationships in those new countries that they wanted to enter into. So for that one, we've seen quite quickly already an increase in revenue. Well, starting from zero baseline to new countries like Zambia, Zimbabwe. So that one has been, as I say, quite easy to measure and quite easy to attribute the change to the technical assistance project. Because I think that's also something that's really important for us as Phatisa, is not to say, cool, okay, we've seen an increase in yields, but how much of that is because of what we've done? And in this case, because we were helping them with route to market strategies and we were helping them train smallholder farmers in brand new geographies, they were like, this is because of the Phatisa project, 100%. So, not 100% in our attribution models. You always have to discount something. There are obviously always other factors involved, but it was an easier one to say, this is because of this project. And we could see clearly, this is how much the project cost. And we've already more than covered the project cost in terms of additional revenue that's come in from that project.
Great, thanks. And I think it's always great to hear if you can attribute that additionality. So to be able to say that in the absence of this funding, this wouldn't have happened, this impact wouldn't have been generated, this business wouldn't have been able to grow. And that's really what we're after, right, as impact investors.
Exactly.
I think hearing the three of you speak, obviously, and we're talking about the investment approach and the process and what we're looking to achieve. We're talking about monitoring and measuring our impact. And I think that it can make it seem like it's a lot simpler than it is in real life. And it also probably makes it seem like it's something you could just start overnight. And we know that that's not true. So, Marika, I know that you guys had an interesting journey on your side and to end up where you are at the moment. And we'd love to hear a little bit more about that.
Yes, thanks. So Inspired Evolution was founded in 2007 by two pioneers. They are managing partners, Christopher Clark and Wayne Keast. And they were basically one of the first ones to actually go out and prove that climate-focused impact investment can create commercially viable returns alongside the environmental and social returns. So this idea of impact investing was embedded in the original investment thesis. And then they decided to, let's keep our focus on two main themes. So it's renewable energy infrastructure and resource efficiency investments and growth investments. So over time, then you put your policies and your procedures in place, and we developed a sophisticated ESMS, which is the Environmental Social Management System. And I've been with the company for 7 years, and just over 7 years it has changed, it's improved, and most recently, last year actually, we've upgraded it to this comprehensive ESG risk management system that we love abbreviations. So it's the ESGMS with numerous underlying policies and procedures and templates. And parallel to the risk management side, we now kind of developed this impact side as well. So as you know, impact investing has become very complex, especially, you know, when it comes to reporting and disclosures. And you talked about the jargon earlier on. There's a lot of TCFD, SFTR, SASB, CSRD, all of those. But we realize, you know, practically what does that mean? And we realize, right, impact is a value driver. So we've got our ESG risk management system on the one side. Parallel to that is our investment opportunities as a value driver. And that's how it's developed over the last few years as well, where we now have the entire investment team looking at how do we look at risk screening and assessing our risks, but also looking at the impact opportunities throughout the entire investment cycle. So this means that up front, we make sure we identify, assess, track, and measure, you know, risk management and impact assessment throughout the entire investment cycle as aligned with our sustainable development goals, which we picked 5 of. And then over the past 17 years, we've actually, you know, proved that, you know, commercial returns, it's there. We've developed over 10 gigawatts of renewable energy projects in Africa. And we hope to continue this trend and to transform the energy landscape across Africa to create this dream vision of a cleaner, safer, more equitable and a just energy future for the communities in the areas that we operate.
Oh, fantastic. And I think it is a really interesting evolution, to pardon the pun, but of the fun and the approach. And I think, correct me if I'm wrong, but I mean, you've gone from this initial investment thesis to being able to measure, is it over 100 different metrics in terms of your impact and financial return?
Correct. Yes, we call it our master spreadsheet. I like to refer to it as a monster spreadsheet. So yes, that's something that we have to track in and measure everything. So it's also about, what's that saying about you can't, you know, measure that you can't manage, but it's to make sure that we assess, identify, track, measure the targets and the metrics, and then also to report back to investors, because I want to say hashtag stewardship, but we are all custodians of other people's money, but also of the environment and the communities and the projects that we operate. So it's about, yeah, keeping track of those metrics. And maybe when we speak again in a year's time, it might be over 200 metrics, but I'll keep the monster spreadsheet alive.
Yeah, I'm sure that if there's any sort of social enterprises that are on the call today, they're all like dreading this idea of more reporting and impact measurement. I think that's probably where the sort of technical assistance comes in from different organizations to help with that understanding. On that, I mean, you mentioned as well, Marika, the Sustainable Development Goals as sort of a guiding framework for you. And what we see between the three of you here today is very different focus areas, right? So we've got healthcare on one, we've got food security and agriculture on one, and then we've got the sort of climate and socioeconomic development. If I am a would-be impact investor and I'm looking to, you know, maintain, let's say I'm already investing, I'm looking to maintain my financial return, but I'd like to also generate some impact. Let's start with you, Jackson. How do I go about identifying my focus area for impact? How do I know where I need to be?
Yeah, so I think it all boils down to actually, identifying what you want to achieve, right? Because the balance between impact and financial return is a tricky one, right? So you find that sometimes the most impactful businesses have the longest horizons for profit. So I think it's a balance right there. And for us, what we do when we go out to look for businesses, we try to find a good balance. For example, we invest in healthcare, right? So what are you tracking in your business? Are you saving babies? You know, are you trying to reduce mortality? So I think what we do is that depending on the cohort that we're putting together, we predefine what metrics that we are pursuing, and then we select the cohort based on that metric.
Yeah, fantastic. So really needing to be specific. I think, Anya, one of the things that's of interest to me as well is, you know, I always say that one of the biggest disservices we've ever done ourselves in the sort of sustainability space is to refer to environmental, social, and governance issues as if they exist in silos, right? So they're all, it's infinitely complex and they're all deeply interconnected. So how do you prevent yourself from sort of going down a rabbit hole and thinking, even you think of something like agriculture, it very disproportionately impacts women, for example. So then how do you not become a gender fund at the same time? Do you have some tips for keeping things in the lane?
Yeah, I mean, that's a really good question. And I think a lot of, I don't think Marika made a point around, we are stewards of other people's money. So, the majority of our investors are DFIs, development finance institutions, and they themselves have kind of quite clear targets and mandates that they need to reach. And, sometimes you find yourself, I guess what you need to try to avoid is like trying to retrofit your monster spreadsheet, which we also have, Marika, into kind of, every year there seems to be a bit of not scope creep, but additional, as organizations mature, they add in kind of more things they want to measure. And then you're like, okay, how can I fit this into my measurement system that then filters down to my portfolio company? Sorry, that's a bit of a roundabout way, but I guess what in agriculture, as you said, Nicole, gender is really, really topical and something that we are grappling with at the moment. How we can really embed that in our portfolio companies, particularly in kind of the more traditional male-dominated companies that we have. Some of the portfolio companies like, oh, that doesn't work. It won't make sense. It's not safe for women. And how do you push back against that? And you do always have your competing. I mean, I feel like I always have multiple competing kind of priorities. So yeah, I don't think our DFIs would let us silo ourselves at this stage. I think, as you say, there's just so many interlinked things in the food sector, living wage, people being paid, stretch targets around wages, gender, climate, impact on nature, and then on the risk side, making sure there's no kind of underage people working in the portfolio. That's kind of a first stop, obviously, for us. That's an absolute hard no. So that's on the risk side. So yeah, I don't think we've been allowed to silo, unfortunately, even if we wanted to. But as you say, I think the sector is very complex and they all need to kind of work together.
Yeah, absolutely. And I think, in the research that we did as part of assessing the nominations for the awards this year, one of the themes that came out very strongly was this need for collaboration, right? So across the impact investment market, between different stakeholder groups, it was really raised as something that was very important. What does that conversation look like, Marika, when you are, let's say you guys are investing in a particular company, but chances are good that they've probably received funding from other sources too, who might have their own sort of impact expectations. What does that conversation look like between sort of multiple parties involved in trying to deliver impact and financial return?
Thanks. So I think, this is my opportunity to start going into the details of the Sustainable Development Goals we selected, I suppose, because we need to speak a language that everyone understands, right? So when often you have to say, what do we speak about, as you say, like ESG, now we silo things and everyone's got their own idea. But when we speak about Sustainable Development Goals, we kind of know as a reference and as a framework what we refer to. And then in this box of colorful blocks and Legos, we say, right, what is applicable to climate-focused and gender lens investing? Then we say, right, Sustainable Development Goal 13 is climate action. What is inside the box of climate action? And what does the targets and metrics look like? What do we want to measure? Why do we want to measure it? Right, we want to decarbonize. So you measure your greenhouse gas emissions, your greenhouse gas avoidance, your renewable energy generated to align with the net zero future as outlined in the Paris Agreement. And then also energy access, modern, clean, safe, and convenient, energy and reliability. So then you look at how much capital deployment is there in the climate finance side, how much cost savings do you actually offer your clients in the connections, and how many connections have you made? Then when you look at the more social side, you mentioned gender. We try to align it with 2X, and that's just another kind of a global drive to say, how do we measure these things? How do we look at how many leaders are there in the company? How can we help with training and development? How many people were developed? So then it takes an idea down to the targets and metrics to make it digestible, implementable, and measurable, and then link it to something that everyone can understand. So that, and importantly, one of our 5 blocks is the partnership for the goal, because then we start to talk the same language. the partnerships is not just our investors, but also other lenders involved in this transaction and industry specialists. And then everyone can, give input to achieve this greater goal, speak the same language. And then even when we, measure our targets and metrics, to make sure that it's aligned also with something like the global Impact Investment Network's IRIS Plus methodology. So underlying that is also a specific methodology to ensure that it brings a sense of quality to the table and to make sure that there's some sense of certainty. Because, impact investing, everyone thinks it's a risky business, which it is. But if you de-risk it properly and you get everyone on board, you speak the same language and you track and you measure it, you can absolutely prove this as a commercially viable investment that, again, creates the financial returns alongside the environmental and social returns. So that's I think the bottom line is speaking the same language, making sure we're all aligned, and then working towards that same goal, which is long term. And private equity luckily has patient capital, so we'll see the changes over time. And it's also exciting because every single investment is different, so you get to do different things and help companies along their journey to create this shared goal that everyone has.
Yeah, thanks, Brooke. And I think you raised some really interesting points there. I think communication and speaking the same language is something that's really important. And it's something that I think is often missing on the spectrum of capital, right? So from your sort of mainstream traditional investment through to philanthropy, we're not always talking about the same things, but we are all after the same thing at the end of the day. And I think it also speaks to the rapidly evolving nature of the field, right? So we know that there's new terminology, new jargon every day. There's new frameworks, there's new data available, there's new platforms that you can use. And so I suppose it speaks to the need to really try and get teams together that are capable of making these kinds of decisions. Anya, can you talk to us a little bit more about what this means from an impact investor perspective in terms of investing in your own capacity to make the right decisions?
I think that's a really good point. And I think, I'm really grateful to work at Phatisa, because I think our senior management, who aren't all sustainability experts, I think they really understand it. And I think they really see the value that impact brings to our portfolio from a commercial perspective. I think, we're currently fundraising for our third fund. And I think our senior partners understand that without impact and ESG, ESG risk management as a very minimum, but without driving impact, there is no fund 3. It's become that embedded in the way that we operate and in the kind of, the DFIs we raise funding from. So I think that's been really cool to see. And, because of that, the senior partners have really allowed us to invest in our capacity and our skills development as a sustainability team. I think, as you say, there's always kind of, always new frameworks, new this. And, I sometimes have a tendency to be like, got a long to-do list, I can't attend this conference and that. And then, that's part of your job, to stay on top of what's happening. You need to be attending these conferences to understand what's happening out there. So yeah, as I said, I think really lucky at Phatisa that we've got a supportive, senior leadership team that understand the importance of that and really encourage us as a sustainability team to make sure we are staying on top of what's happening. Which is difficult because, as we said, there's always changing new legislation, new frameworks. It's tricky. It's also tricky sometimes to remain focused, and prioritize, what needs to be the next priority in our sustainability and impact journey when there's so much you could do.
Yeah, definitely. And I think that's the challenge. It's one of the challenges from the perspective of the person making the investments, right? So it's trying to make sure that you have got the information, the skills, the technology that you need, in order to make the right decisions. I think there's probably a range of additional challenges that we might face. I know that we hear a lot, if you speak to social enterprises, so there's sort of those that are looking for investment, they'll say that the challenge is that there isn't money. And if you speak to investors like yourselves, you'll hear that there aren't necessarily projects or companies that you can invest in. Both of those sides, when you have these conversations with the opposite side, we hear is not really the case. So investors will say, we're here, we've got money, we can't find projects. You'll find, the project owners will say, we're here, we've got a project, we can't find finance. So, interested to hear from you guys, maybe start with you, Jackson, around how real is that kind of challenge, and what are some of the other very real challenges that you face from the investor side?
I think that's a very real challenge. And what we see on a daily basis is that there are so many interesting ideas and interesting companies on the continent. And the challenge is investment readiness, right? So most of them, you'll find that when they're going out to fundraise, they haven't thought through their unit economics. They don't have a proper financial model. They haven't thought through their go-to-market approaches. They haven't refined their products. We come in early, so we get to see all these teething problems. So I think gauging by the number of companies that we look at in a year, these are very common problems, and I think that's the space where we are in as incubators. So it's a real problem. There are so many interesting but non-bankable business models on the continent, just because they haven't spent enough time to think through their business models. So we to help them to think through that and construct proper financial models and improve on their storytelling, define their target markets, who is the customer, how do they make money, how are they going to be sustainable.
Okay, so a very clear sort of tip there for any of the social enterprises or organizations that are looking to achieve some attract some impact investment, to make sure that that business case is solid. I think so important, and you can't say enough that the generation of impact is fantastic, and that is what will attract philanthropy. If you want impact investment, you need to do both. You need to have that solid business case too. And I do think that's a real challenge on the sort of project side. But again, great when there is that technical assistance that's available and sort of a key component of providing impact investment. Marika, how about from your side? What are some of the challenges you guys have found, and maybe the lessons that you've learned from it?
Yeah, so being an African impact investor, we deal with very unique challenges, and often it's outside of our control, right? So we've got geopolitical instability in countries, and macroeconomic challenges and uncertainties, and regulatory complexities. And as much as that is outside of our control, it creates the risk of low deal flow, slow investor appetite. But then again, it's that it's in our name, inspired evolution. Evolution is about dynamic adaptation to ever-changing environments. So how do we address that? You make sure that you've got your innovative business models and your fit-for-purpose risk screening tools and hedging instruments. So it's about being adaptive and flexible, and making sure that you also understand the countries in which you operate. So you do a proper risk screening to address these constraints. Because just to add, again, coming back to your question, the challenges are also, poor infrastructure sometimes, about unreliable energy availability for the companies, the portfolio companies, to operate properly, to reach the profits and create the returns that we actually are looking for. And then, also even more so, complex value chains are becoming increasingly complex and challenging. So it's also about the portfolio company's ability to adapt to these ever-changing environments. And challenges are unfortunately not something that you can always be prepared for, but you can be resilient enough to adapt to that. And those are the kind of companies that we also want to invest into, because we need to adapt with them and provide the right support then to overcome these complexities and these challenges.
Yeah, fantastic. I think if it were easy, everyone would be doing it, right? So I think that's really an important note. We do have a couple of questions, so I want to get to those in a moment, but I just wanted to check first, Anya, do you want to add anything around some of the additional challenges from the investor perspective, some of the lessons maybe that Phatisa has learned over time?
Sure. So I think, in the evolution of Phatisa, I think, we're speaking about patient capital, what we can and can't do. And something that we battled as Phatisa was primary agriculture. So although this is hugely impactful in terms of, the number of people it employs, the food security impacts, that it just didn't align to the timing we were getting from our investors. So our investors were expecting returns in, say, 5 to 7 years, and that doesn't work in a primary ag sector. So maybe quite basic, but just really understanding kind of what can work with your investment mandate, and then adjusting as you see fit. So we've now pivoted to investing in the broader food supply chain, and some of our businesses have components of primary agriculture, but not only primary agriculture, because, I think a key lesson learned for us was getting the returns that were necessary, meeting our hurdle rates in the timelines provided by our investors just wasn't feasible in the primary ag sector. So that was, I think, a big challenge that we faced. I think another challenge is getting the portfolio companies on board. So again, such a wide range. Sometimes we work with portfolio companies that we're like, well, we have nothing to teach you. You are amazing. You're doing an absolutely incredible job. And we're actually entering a new investment with a company it's really mature. And, we've been speaking to them about our technical assistance facility kind of as we started. But then on the flip side, we have a portfolio company that, didn't have anything in place. So with them, rather than jumping straight to impact, we're working slowly with them to build up the ESMS, the environmental and social management system, get kind of really basic ESG management, policies and procedures in place before we move to the more impactful stuff. So I guess the lesson there is kind of meet your portfolio companies where they are. They all, sit on a very wide range of maturity when it comes to impact and sustainability. Meet them where they are, and some require a lot of hand-holding. Others, you kind of need to let them fly and be quite independent because they're already doing a lot of amazing work. So yeah, meet them where they are, I guess.
Yeah,
is the summary.
That's an interesting point, and I think it's a different perspective, right, than certain impact investors would have, because there is this idea of what does a project look like in order for it to be considered to be investment ready. So, I mean, we already know that, what Marika is looking at is going to be very different to what yourselves or Jackson are looking at. So maybe we can go on, what does an investment ready opportunity look like to you, Jackson?
Yeah, so I think what that looks like to us as Villgro is really have you thought about both the financial and the impact metrics. For example, if you're looking for more commercial capital, like say equity or convertible instrument, so have you thought about unit economics, right? Do you know how you're going to make money? So have you thought about your revenue streams and your key costs? Have you thought about, if you're looking for equity, have you thought about valuations? Because one big challenge that we see every day is unrealistic value expectations, right? So if you're in a company with 100,000 annual revenue, thinking that they are worth $20 million in value, and they can't justify that. So we see a lot of unrealistic valuation expectations. So I think to us, what investment readiness looks like is have you thought through your unit economics? Have you thought about do you have a very good sense of what your market looks like? What is there demand for your product, right? So if you're gonna sell the first unit today, if you're pre-revenue, what does the next 5 years look like? So we look at that from both the financial and the impact side. So on the impact side, what's your theory of change? Is that clear? So what are you gonna, how are you gonna be if you want to, if you're healthcare business and you are offering a healthcare service, so have you thought about the impact of that, and how many people are you going to treat in a day, in a month, in a year? So all those metrics together, financial and social at the same time. So we look at all those.
Okay, so you need to have a really clear idea of what exactly it is that you're hoping to achieve, right? And with an organization like Villgro, you guys will help the businesses to get to that point. The slightly different approach to what Inspired Evolution might take from your side, Marika.
Yes, that's right. So, it's a good question to say, how do we check, to do a temperature, are we investor ready? But the question is actually, who's your investor? So it's very important to understand at what phase your company is and what type of investor you are looking for. And then by the time it gets to private equity, we have very specific investment criteria. Then it's not just about, because you may be investor ready, but then you have to make sure that you fit the investor criteria of the specific fund. So we look at, for example, if we look at something that's investor ready, does it have the specific proven technology and managerial skills and the setup of the company that we're looking for, and very specific ticket sizes. So we look at 20 to 40 million US dollars ticket sizes. So that's all also something very specific to look at whether someone's investor ready for our specific fund, and then your market rate returns. We want to see some traction. Can you deliver? And we like to take majority stake control of a business. Is that an option? So it's very much understanding when you pitch your investment to a fund or an investor, to understand what the investor criteria is, and then ask yourself, are we investor ready as aligned with specific funds investor criteria? If not, where else can you go? I mean, it's never a give up and move on situation. Just look at the different types of finance that is available, especially in climate finance, especially in gender lens focus. Sometimes there's just specific investor criteria that you have to look for, and then you'll say, right, I'm investment ready for this specific fund, and that'll set at least the framework for taking the next steps.
Yeah, great. I think that's really practical advice, Marika. What if I flipped it on its head and I said to you, how do you know if you're impact investor ready? So how do you know if from an investor side, so if you were starting Inspired Evolution from scratch today, what are sort of the key criteria you'd need to meet in order to be an effective impact investor?
I suppose then, where am I going fundraising? Who is going to be the LPs for my fund, my limited partners? And then I have to understand their needs, because again, coming back to that stewardship, I'm going to be custodians of their money. So I have to understand their needs and what they are looking for. So to answer that in a practical answer, it would be, is it a climate finance that I'm looking for? So the fundraising would be to specific DFIs with specific lenses that they want to deploy their capital into. Then I need to say, right, I'm going to focus on Sustainable Development 13 that focuses on climate action. These are the targets, these are the metrics, and this is what it's going to look like. And it's again coming back to, I'm so glad you actually mentioned that this is the pool of capital that is available, but the funnel is about this big, and then here's all the portfolio companies needing the funds, and looking at that funnel to say that, right, as an investor, when I start out, what type of capital am I going to look for? What is the funnel that I need to deploy that capital through? It's not easy to unlock those climate capital. It's really not easy. But if you understand what your mission and objectives are, like our pioneering managing partners, they were very specific about they want to look at climate finance and make sure that it's impact investing, commercial returns, and then you start to do your fundraising and look at the right capital. So it's about tracing the money back to the one that you actually want to unlock the capital from an investor side. Hope that helps.
Yeah, it definitely does. And I think it also raises some interesting questions for me around, one of the things that investors are particularly concerned about right now is this concept of greenwashing, or when it comes to the SDGs, I think we're calling it rainbow washing these days, and impact washing has also recently been coined. So this idea of saying that you are an impact investor and then on the ground being found to be mistaken, right? And I think that can happen through deliberate intent, which is obviously just fraud, but it can also happen sort of inadvertently. So have you got examples potentially of, unintended effects of some of your investments, or where something didn't go quite according to plan, and how that maybe played out? Jackson, have there been, I imagine in healthcare this can happen and you've probably got systems in place to prevent it, but is there any instance where you thought, yeah, that's not exactly how we had intended that to go?
Yeah, there are always surprises, also because we work in very early stage. So there are times you look at very exciting ideas, but then the journey is long. Like I said, for example, in medtech, you find that the horizon can be quite long. I mean, it can take even 5, 7, 8 years for a company to be profitable. So you might look at an idea or a business and think that maybe you put in money and then they are going to be fundraising and getting good traction in year 2, year 3, but then in year 5, year 6, they're still looking really much the same. So I think there's all that. I mean, there's at times if you're not careful, this overselling of these ideas, and then you find they haven't really thought through, what skill looks like. So we are very thorough now. Just this or not you've learned so far. We're very thorough. when assessing all these ideas. So there are always surprises. You can't think that in year 2, year 3 you're making money, but then you're still there a few years later. So yeah, the answer is yes.
I see, Anya, you were nodding quite a bit there. Did you have an example for us?
No, I mean, I think, it's in the food supply chain. I think there's lots of challenges. I think health and safety is something that we are really, really focused on, again, as a bare minimum. But in terms of kind of things going wrong, I think, the thesis that we always enter into our investments is kind of strong impact, strong financial return. And we've recently sold a business that we held on to for much longer than planned, and impact was fantastic and financial returns were not quite where we'd hoped they would be. So, sometimes I think, in the setting, and because a lot of our investors are DFIs, I think, they do have expectations around financial returns, but I think because we could at least tell the impact story, it definitely softened the blow a little bit, if that makes sense. But yeah, I guess, as I say, what we're always looking for is the two kind of moving in parallel. And I really do believe, I think there's so much literature about it, is that they are correlated. Strong impact returns will result in strong financial returns. They are really correlated. But yeah, as I said, it hasn't always worked like that in practice.
Yeah, and you've always got to be careful of sort of skating that line and becoming a grant maker by accident. So I do think that's a really good point. Marika, do you have, I mean, they can't all be red rockets, right? So, have you had these examples? And in that case, what do you do, right? As an impact investor, you realize something is not going to deliver on either front. How do you handle that?
Yeah, I would love to say that we have no problems whatsoever, just smooth sailing. But as you say, the challenges are real. And often I also find it's about managing expectations. And that's why when I introduced myself, I said as head of ESG and impact, you wear many hats, because it's about managing investor expectations. It's about managing portfolio company expectations, employees, contractors, supply chain. And then, as you rightly point out, we putting ourselves out there as an impact fund and saying, we deliver all these commercial returns alongside environmental, social returns, even saying, here are the metrics, this is what we prove. And then, what does that actually mean to other people through their perspectives? So also, I think we've kind of ran into challenges, not just, the commercial returns that doesn't turn out like we planned out initially, and other, as Anya also mentioned, the challenges of incidences and accidents. It's about just looking at the maturity of the business itself to say that, do we expect portfolio companies to operate in this manner? And then taking 3 steps back to say that, do you understand what impact investing is? Do you understand what an ESG management system is? And then when you realize, hang on, again, managing expectations, we need to start from scratch. This is how we're going to roll out in this country for this portfolio company. So it's, again, I think, Anya, you said meeting your portfolio company where they are. And I think that is where the reality coin dropped for us as well through a lot of these. And also just the role that management, CEOs, boards, play. And we also always talk about intentionality, but it starts with a DNA inside that company. You can say what you want, but if it's not embedded in that company, it's going to look a little bit different, even if it's the same portfolio company over time. And that some of these, unfortunately, you only see play out over time. So there's a lot of risk involved. There's a lot of trust involved. And you have to, again, it's just so important to remain resilient and have the checks and balances in place to address the challenges as and when they come along. But yeah, unfortunately, not always red rockets, but even in red rocket, we have our challenges and we continue improving. So I see also every time we have a mistake or, there's an incident, accident, or we try to, fill the gaps, it's an opportunity to learn and an opportunity to improve. And that's where the value lies in impact investing.
Yeah, well, that's great to hear. I think this idea of it's advice for the impact investors and for the companies looking to source it is to be resilient and to be able to adapt is really important. And I think you also mentioned something else that's really interesting, this idea of that there's always risk, right? And one thing that we definitely are seeing, and it's making some headlines lately, is this idea that emerging markets in general, and Africa in particular, is associated with this higher risk premium, right? And it's because of a lack of understanding of the market, really. And when we see investors like yourselves who are based in the markets in which you operate and who have this in-depth understanding, I'm curious to understand from you what you see as the appetite from investors from beyond Africa to invest in the continent, and maybe your relationships with them as some of your funders. Jackson, when you guys are busy with your projects, I mean, what's the attitude generally from impact investors from outside of Africa?
Yeah, so I think the trend is positive. When you came in here about 8 years ago, what you're looking at now, I think things have changed quite significantly. So most of our funder partners are actually from outside Africa. So I think that the funding is there, the appetite is there. It's just about how you make your case and how you present the opportunities in Africa. So I think what we are seeing is that there's growing appetite, across venture capital, private equity, and all these other impact investors, even corporate-backed investment firms. So yeah, we've seen a very positive trend over the years.
Anya, and yourself, you're also seeing this sort of increasing willingness to get involved in projects in Africa?
Definitely. And I think, again, because a lot of our investors are DFI communities, I think that they have mandates and they have targets for investing in Africa. So I think, again, as Marika mentioned, it's just, meeting kind of finding businesses in the right sector with the right ticket size that have, positive projections, meeting all those things in one company is definitely tricky. But in terms of appetite for investing in Africa, can only see it growing.
Okay, so your prediction is that it will grow. How about you, Marika? Is it something, when you look at the trends and you think about the future of impact investing, do you see largely a positive story for investments in Africa?
Very much. I mean, over time, and I feel like I should be using my David Attenborough narrative voice when I say back in my days, but it has been about 20 years now when it started out, sustainable development and how things have developed and grown. The trends literally just in the last few years have increased immensely, from being kind of reactive to, regulation and compliance, to being more proactive, value driving, because that's what we are there to prove as well. And I think there is a maturing landscape now for ESG and impact, especially we're looking at, as we're fundraising now for Evolution 3 Fund as well, a lot more interest from the USA and again, European DFIs as well. Everyone wants to come to Africa. And because, as you said when you started out, is that, the impact that we make when it's financial returns alongside environmental social returns has so much more richness to it when you look at the African continent, because everything we've got, the workforce, we've got the environment, and we need the financial gains. So I think everyone understands that when you want to create change in the world, Africa is definitely the place to do it. It's becoming very mature in the types of businesses opportunities that we offer. It's becoming more proactive in business strategies. So I see that this future trends of impact investing is now being realized by not just countries, but also by business leaders, to say that, right, there's definitely now an opportunity for us also to get involved here in this mature environment, so that they can help us drive the change that everyone is looking for. And specifically for us, with a climate lens, it is to drive that strong, low carbon, climate resilient, resource efficient economy in Africa. And then it creates investor interest, and then investors want to come to Africa. But that said, when you go through the due diligence phase, you can see everyone's still a little bit unsure about, climate and impact investing in Africa. So the due diligence phase is very intensive. It's very detailed. But again, then it's just about showing them and giving them the certainty that this is a good space to be in right now. And I can see that trend definitely improving and going forward.
Oh, well, I mean, you should be our ambassador out for Africa. So you've done such a good job of selling the investment case and the impact investment case for the continent. I mean, what is stopping? Are we seeing that same kind of enthusiasm from investors in Africa? I mean, is it they're also having that same approach, or is largely are we looking externally? Anya, what's been your experience?
I think it's a mix for sure. I think Phatisa's portfolio, I think, is probably more heavily weighted to funders outside of Africa. Again, as I've mentioned, a lot of them have developmental mandates to invest in Africa. But yeah, we've actually had some really great experiences working with African-based investors as well. I think what the external investors appreciate about Phatisa is our knowledge of Africa, whereas some of the other investors in our fund are like, we have experience in Africa, we get Africa ourselves, we can make direct investments. But I think kind of our unique selling point is we're based in Africa, our team is majority African, and we really understand how Africa works, which is the kind of, I guess, lens the external investors are needing.
Great, thanks. We have a question here, Jackson. I think you might be well placed to answer it. So I'm going to read it to you sort of as it is. I might ad lib a little bit. Apologies to Dion, who's asked the question. But here it goes. He says, what if a solopreneur has an impactful idea that is commercially viable, but part of the investment that's required at pre-seed is to employ a team to gain investor confidence from a governance perspective? What investors can be approached without disclosing too much from the onset? So I guess how would you go about if you were in that position, or if somebody was coming to you with that kind of proposition, Jackson? What would the next step look like?
Yeah. So what I would say about that is, and we see this a lot because we, again, like I said, we invest in early stage. When you're pitching an idea, a very early idea that you believe is impactful, you may not necessarily avoid disclosing a lot of information, because most of your investment thesis is based on research, it's idea stage. But in terms of what investors to approach, I wouldn't, for example, so this depends on the instrument again. So I wouldn't, for example, go for an equity investment at that point, because then the question of valuation will be a bit complicated. What are you valuing and how are you helping about it? So for this kind of idea, I've seen grant funding being very appropriate. And there are other times I have seen safe instruments and convertible notes. That helps you, it buys you time to build your value, to build a business. Even for you can think about valuing and onboarding more complex instruments like equity. So I would say with an idea like this, an incubator is great. Look for more patient capital. If you can find grants, even the better.
Great, thank you. So I think, again, it's the same argument we're making about, when we think about impact investment, it can take many forms, right? And it's about making sure you're using the right tool for the job at any given point in the project's life cycle. So I think thanks very much for the question, Dion. I think that's a really good one. I think we've been talking a lot about sort of where we came from and what we're doing. I'm really keen to get your thoughts on where we're going, right? So when you think about impact investment in Africa, Anya, let's start with you. What are, if you were to say, like, the three big trends that you see coming for impact investing market in Africa going forward? What are some of the things that stand out for you?
So, I mean, it feels like maybe a bit obvious to state, but climate, I think, as we're moving into Fund 3 and fundraising for our third food fund, I feel like with a lot of the investors, if we didn't have a strong kind of climate strategy in place as Phatisa, we wouldn't even get a foot in the door. I think it's almost kind of like a first stage review at this stage, is making sure you understand your climate impact. Another thing that we're focusing quite a lot on as Phatisa at the moment is then the kind of the nexus between climate and nature. So, TCFD, everyone knows about, but moving into the TNFD, so the Task Force for Nature-Based Financial Disclosures. Again, because of the sector that we invest in, our portfolio companies are already exposed to nature, but they also have a strong impact on nature. And I think the kind of awareness and reporting and kind of projects around the impact on nature are only going to increase in frequency. So we're really seeing that in terms of the types of questions our investors are starting to ask around nature and what we're doing there. And then, again, feels like a very obvious one, but I think gender, I think a lot of, we've been tracking gender data for a long time, but really seeing an increase in focus on that coming down from our portfolio companies. So I think, as we said earlier in the call, so many competing priorities. Yeah, but I think they all work together. As we know, I think gender and climate also, it's, you know, poor females that are most exposed to the impacts of climate change. So the three of them are really interlinked, but those are the ones we're seeing the most kind of questions and pressure around, if I can say.
Great. So, I mean, some very clear impact themes that I think will be gaining a lot of attention going forward. Jackson, for your side, when you think about the future of impact investment in Africa, what are some of the key things that come to mind for you?
Yeah, like for healthcare, where we work, we're starting to see an increasing trend of the overlap between technology and healthcare. For instance, lots of AI into healthcare and things like that. So what the future looks like to me is that we are going to be seeing a lot of innovation around that intersection between tech and healthcare. And we're also seeing increasing appetite in funding early stage healthcare, especially in Africa. So when we came in 8 years ago, we were among the a very small number of early stage healthcare investors in Africa. We have seen lots of funds join the space and lots of other incubators. So what the future looks like is that there are going to be more investors willing to risk in the early stage of healthcare. And you're going to be seeing a lot of innovation around that intersection between tech and health.
Great, thank you so much. So we've got, I mean, some impact themes to focus on, and we've got some specific industries that are looking promising. If you are a social enterprise or an entrepreneur that's listening today, this is something to keep your ears open for sure. So some serious opportunity here. Marika, I'm keen to hear your general thoughts, but also we've got a question in the chat around what does the future look like in terms of potential policy reform in the African markets, and what kinds of reforms might enable more effective impact investing?
Yeah, thanks. And I agree with my fellow panelists, the themes and the trends going forward. And Jackson, I'm actually glad you mentioned the very important point of innovation, because, and that's coming to the question, is innovation in terms of tech and just market drivers and, you know, geopolitical and macroeconomic environments. It's changing faster than countries can actually stay on top of policy reforms, because policy reform is a slow, patient process. And to get things, you know, approved or over the line takes time. And what we don't have is time. We need to, you know, get things funded now. We need to get the ball on the roll, and we need to deploy climate capital faster than the policies can keep up with. So there's I think that comes back to one of the biggest challenges of doing impact investing in Africa, is we have a very slow jurisdiction to say that, but in our country, this is how we operate. And then it's like, yeah, but you know, you need to change to keep up with the changes and the innovation, and how do we unlock the capital, and how can we open up markets in Africa, because often there's so much red tape to do business in Africa that the investor appetite it's not palatable then. But if you change with the times and you create the right policies and the environment conducive to attract business, that's how you're going to get capital into your country. And that's where I also feel entrepreneurs and all the countries that we operate, we need to voice that, to say to governments, listen, we need to open up markets more, we need to do policy reform, and we need to, you know, remove the red tape so that can allow us to create the policies that is conducive to a good market, that we can attract investors, able to unlock that capital. Because again, it's about that funnel, and you need to open that up to allow the capital to be deployed. So again, from a climate perspective, I'm very proud of South Africa, the changes that we've made so far in the last few years. We've seen, you know, the lifting of the cap of how many megawatts you can cap the megawatt caps, and our REAP program as well, how that has, you know, created an environment that is gives the certainty to investors to come to our country to invest in energy investments. And so there's a lot of good stories to tell as well across the continent, but it comes back to political will, unfortunately, when we talk about anything with regards to how do you create the right political environment. It's about power. It's about a lot more than just what we have control over. So then you come back to the geopolitical environment, macroeconomic factors, not always easy. So again, to answer that question about the policy reforms, then, raise your voice, do what you can, meet investors where you can, but we need to encourage countries as well to drive this change. Again, coming back to Sustainable Development Goal 17 as well, partnerships. Work with other industry advisory boards, specialists, lenders, investors to help governments often to make those changes that is so needed. But it's happening, and I'm seeing that shift from reactive to proactive. So it's looking promising.
Yeah, and that's great. And I think it's a really well-rounded sort of position. What we found in the report that we put together from these awards is really also this idea of meeting in the middle, right? So collaboration, as we mentioned, came up really strongly as something that is not only considered to be a critical success factor, but it's also seen as the future trend to watch, right? Is that organizations across the stakeholder groups are going to be working together much more closely. I think a big part of that is this convergence toward the middle. So we're seeing mainstream commercial investors are increasingly seeing, as you mentioned, Anya, the financial reward that comes with impactful investing. And we're also seeing, as we mentioned, philanthropy sort of moving towards this idea of generating more than just an impact return, but also a financial return where they can. What I'd also argue is, Krutham recently also worked on the ESG barometer report. And what we found there was that this was looking at listed companies and how they're increasingly designing their sustainability strategies to deliver impact and to focus on additionality. So you're almost seeing the mainstream markets as well, sort of capital markets are moving toward impact, and it's becoming almost a business as usual, or at least that's what we really hope to see going forward. So I think that's definitely something to consider. And this idea of the policy environment evolving over time, I do think we are seeing flickers of that. We're seeing sort of increased interest in blended finance vehicles, in things like results-based financing, so literally a market for buying outcomes. So we are seeing a lot of really positive developments in that sense, which obviously anyone involved in impact investment on the continent will get really excited about. We're getting ready to wrap up. What I wanted to do was just give sort of a final thought opportunity to our speakers, and also give anyone who's got any final questions that you wanted to shoot through in the chat. Thank you to those that have been throwing their questions in. Maybe just a final thought in terms of, if you are, from your perspective as an impact investor, maybe something that you'd want the impact investing in, market in Africa to take to heart from this discussion. Anya, we'll start with you. What's your final sort of takeaway for the market?
I don't know if it's my final takeaway, but I think as we were all speaking, I think something that the kind of impact investing industry as a whole needs to work on, and I think there are a lot of great initiatives to do this, but it's matching the right people with the right sources of funding. So I think, we've spoken about this pipeline, and there's all these great businesses, but they don't match with this business. But, is there a mechanism that you can then match them with another investor that would be more suitable? And also, I think we often hear about these like big numbers, billions of US dollars committed to Africa climate change, but like, where do people access it? And I think there's organizations such as Green Cape and Krutham that are doing really great research around, finding sources of funding and matching the right people. But I think that's something that if we get that right, it'll be really catalytic in terms of growing impact in Africa.
Great. Oh, really good. I think something for Krutham to look into for sure. Jackson, what would your sort of final thought be, something you'd like to leave the audience with today?
Yeah, just a reflection, especially on the investment side. We are always talking about investor readiness, but now there's something else I've been thinking about, Africa readiness for funders, right? So what we have seen a lot of times is funders coming from the global north with very different expectations of what the global south looks like. So I think as funders, it's very interesting for us to contextualize our mandates and thesis, look at what Africa looks like. What are those nuances that we must be aware of? So I think that's something that we've been learning as Villgro, and it's something to encourage my fellow investors here to think about Africa readiness. Well, what are those contextual things we must be aware of when you're coming to invest in Africa?
Brilliant, thank you. I think that sort of understanding how to deploy impact investment in an appropriately nuanced way is so critical. Marika, you have the sort of final word.
Ooh, no pressure. But I actually want to follow up from what Jackson just said. And I mean, that is so important. So the Africa readiness and the 3 lessons almost that I can think about is to be consistent, but you have to remain flexible as well in Africa, because every investment is unique and every team have different needs. And then, you know, as professional as we are, we're qualified, we have to remain curious, because there's always room for improvement and there's always opportunities to learn, especially in Africa. And again, as we look at, you know, compliance-driven investment, to give that certainty and to be a good stewardship from, you know, our investors, we have to remain pragmatic as well, because the policies need to be compliant, yes, but it also needs to be practically implementable. And that pragmatism, I don't know if that's a word, but I just made it up. So being pragmatic towards every single, you know, investment, and to get everyone's teamwork on board is what makes it so exciting to be in Africa for impact investing, and also that de-risks the investment things. And then again, I can't help coming back to that stewardship word, because then we are being good stewards of the money and the environment and the communities in which we operate. And that's also leaving a good legacy of deployment of capital in Africa, and keeping it here and building a great continent with great companies. So I think that's going to be my mic drop moment for the day. Thanks.
Yeah, and congratulations. That was a very well done, I think, on a mic drop moment. So that's a very good place to sort of wrap. I think we've learned a lot today. I wanted to thank you very much for your time. My job now is very easy. So we've been speaking for about 90 minutes, which is incredible how quickly the time goes. So thank you very much for your time. I'd like to remind everyone on the call that you can go to the website that's been shared in the chat to download the report from the awards and also the case studies if you'd like to learn more about each of these winners. I'm going to hand over to Stuart to do a quick closing, but my job now is very easy, just to do a final thank you very much to our speakers. We really appreciate it. And thank you to everyone who joined us for the conversation today.
Thanks, Nicole, and thanks very much, Marika, Jackson, Anya, for your input and your time on a Thursday afternoon. Hugely valuable. I really take away the point on getting investors to be Africa ready, and by exposing them to what's happening on the continent, hopefully we achieve that. And also helping social entrepreneurs to become more investment ready as well. And hearing from you today, I'm sure would have helped them. So thanks very much. And thanks very much to the attendees who joined us. Please do reach out if you want to continue the conversation. Krutham is always keen to engage with those involved in the ecosystem and work out how we could help you in achieving your impact investment objectives. So please drop a line to anyone on the team at Krutham if you would like to pick up on discussion on any of the themes you've heard about today. And a final thank you to all of the attendees for joining us. Look forward to more engagement as we continue to work together on building the Africa ecosystem. Thanks, everybody.
Thanks, everyone. Keep well.
Thank you so much.
Thanks, everyone.